Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Nicole, Elliot, technical analyst and private investor. It's been a little while, so great to have you back on the show. I'm going to look at a few currencies today, starting off with the Norwegian Krone. Just talk us through this chart. Why should investors be looking at this currency pair as well?
Well, the reason I chose the currencies I've chosen today is because today is the winter solstice. And it's kind of the shortest day of the year.
Yes, not the quietest.
Not the quietest. We've got a whole load of New Age tribes joining in at Stonehenge at dawn this morning. It's also cold, and while I'm looking forward to Christmas very much, I do find this time of year quite challenging. And so it's set me thinking about the North, the North Star, the North Pole, what's happening in Scandinavian.
Yes.
And certainly there's a lot happening in Scandinavian. And on this weekly chart of the Norwegian Krone against the euro, you can see that throughout 2017, you need more and more kronas to buy yourself a euro. In fact, you need almost 10 krona to buy yourself a euro, which is the weakest ever it's ever been. We've been here before at 10, a psychological number as well. We got here in 2008, 2014 and 2015. But I think what's really surprising me is that, with Brent crude at $65 a barrel, the nation with the biggest sovereign wealth fund in the world, the Norges Bank, who've got a positive rate target of 50 basis points, so there is a premium here for the krona, and yet, look at it, we're off 13% this year. I mean, that's awful.
Why is that?
Well, this is why I sort of want to discuss it, but I mean, technically, you can see that we've got a three-wave rally of the euro. Okay, the moving averages and all that Ichimoku cloud and stuff like that has been suggesting that this is the trend ever since the April of this year. So, okay, so the chart confirms the move and suggests that it's got further to go. I mean, certainly the last 3 weeks I've just drawn in a sort of little consolidation type truncated triangle. And now what I'm worried about is that between now and New Year's Day, if we were to break above 10 or close very close to 10, that would be a significant turn for the worse for the Norwegian Krone. Why is it like this? Well, I think one of the things that possibly is here is that the feeling is that the Brent price is considered temporary, and then things will go pear-shaped for an oil producer again. But I think the main thing is that they've got a very expensive property market, a heavily indebted retail customer, and I think this rather stretched, and so it won't take much to rock the boat. Now, the Norges Bank is aware of this. They started making sort of thumping noises last week about this, saying, no, although we've got ultra-low interest rates like so many other people in the world, we could start putting up our target rate in the first quarter of 2018. So that you can see it's just pulled back a little bit from 9.96 where we got to this week. It's just not quite so weak. So they are going to start, not only keeping an eye, but feeling perhaps that they've got to do something. Now, my hunch here is that it's not going to pan out in the Norges Bank's favour. They're going to have a right tussle on their hands. And there's something fundamentally flawed with this currency.
Well, it's a beautiful country, and as I say, with a huge sovereign wealth fund, but maybe some bad things afoot for 2018. Understood. Nicole, thank you very much for joining us.